Welcome back to the channel. As always, if you are copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called APLD, Applied Digital Corporation. This is an organization that started building uh, construction sites in order to benefit from the cryptocurrency boom that we saw post pandemic times. As you can see, they've been around for quite a while and they experienced an incredible boom within that period. Of course, we saw a bear market afterwards, but the company is now shooting up again following the introduction of the ChatGPT and AI platforms that we're seeing now. So why am I looking at this stock at the moment? As you can see, there's been quite a decent pullback from 40 to low 20s in recent weeks. That is because increased nervousness from the investor community in terms of the viability of artificial intelligence technologies and more importantly, their economics. So there's a big question at the moment as to whether which one of these companies is going to genuinely succeed without going broke first, and serious questions about capex and viability of these projects. So why am I bullish on this stock at the moment? Well, first of all, as it stands today, yes, it might retrace a little bit more uh, to this standard moving averages that we're seeing here. However, over the next few months, I expect the general price action to be bullish for the following reasons. First of all, they shifted, as I mentioned before, from crypto to AI. The demand for computer houses is far superior in this market. And we have seen this, for example, with a huge customer that they have, CoreWeave, promised to pay rent for 15 years to use 400 rooms. That promise alone is worth about 11 billion, which in terms of where the company is at the moment, generating revenues of below 200 million is pretty significant. When we look at the status of that contract, the first 100 rooms are almost ready by now. However, when the rooms are ready, they shift the way in which they collect revenue into a rent model. So they charge a bit of money when they finish the rooms, that's a fit out. But once the rooms are ready, they start charging rent for those customers, and that makes them an interesting proposition in this market because they provide steady rent. And when you look at the last few years, the situation that we've had with commercial real estate, it is no secret that the whole sector as a whole has been struggling massively. As a matter of fact, this niche, so to speak, is probably one of the few options within that wider sector that is at least economically viable in terms of generating revenues from customers. So, in terms of demand, the world needs many more places for AI computing. And the reason why they are well positioned to capture that is because they build them pretty fast. So the timeline for construction is about 12 to 14 months in a cold and low-cost place in North Dakota. That helps them run the computers in a cheap manner. So they have 100 rooms rented and they're building more. And over the next few weeks, I think it's probable that we'll see a few announcements. First of all, the first 100 rooms will go live, and that's when the rent revenue collection will start. Also, we should see more handovers of finished room, proving that they're on time, and that signals additional revenues coming for the company. And of course, new financing clauses and draws. So they already work with Macquarie for the financing of these building sites, which is a very reputable infrastructure investor. But the reality is that in terms of activity, it has been pretty lukewarm in that sector over the last few years. So there is a lot of dry powder from investors to spend on this, specifically because the demand is there. But unlike the actual technology, like AI, this is something that is steady revenue collection. And they do have a clear path to profitability. So if we look at their projections, they're estimated to grow revenues very significantly in 2026 and accelerate in 2027. For a company of this size, sub 7 billion, that is the most important metric, even though they'll still be technically running at a loss, expected to turn significantly into a profit in 2028. So with all that, I think over the next few months, we're going to see more contracts getting signed. The proof of progress will become visible, and more partners will likely be keen to join the financing party. So it's a simple, repeatable design. It doesn't have the technology risk, such as Oracle and Nvidia and all those kind of like chip makers. So relatively straightforward. What is going to be the risk here is primarily the macro. So obviously how the market feels about the AI sector as a whole. Interest rates will be an important one as well, and that is largely determined by the state of the economy. And more intrinsically about the company, their relationship with their biggest customer, CoreWeave. So that is a company that will need to keep an eye on as well, because at the moment, if I look up the stock right here, it's a company that went public fairly recently, and the stock hasn't been doing so well after this initial rally. So that is something to bear into consideration as well. So one of the things that I'm going to use to validate my entry in this particular instance is going to be the relationship or the performance, better said, of the stock. So when this price action starts improving a little bit, that'll probably signal a good time for entry. Hope you enjoyed the video. See you soon.